Maybe it is a suicide round.
Do you actually think these are good rounds for companies? I think they've been called suicide rounds before, where you raise like 100 million at like a $3.1 billion valuation, just as a really high price for the company to grow into, with actually not that much money going into the company.
Well, that's the downside, right? Maybe it is a suicide round.
I think if you need the money, you have to get the money. And if you need the money at a high price, it's better than a low price. I don't, people always say, I don't think raising money at too high a price is only, quote, suicide if you have to raise again, right? If you don't have to raise again and all you do is have some investors who've overpaid and it takes 4 or 5 years to grow into that valuation, well, that's tough shit for the investors. But from the company's perspective, it's fine and you're glad you got the money, right? So I think the number one, what you don't want to do is raise, let's take the 100 at 3 billion. You don't want to raise 100 at 3 billion when you needed 400. And then you go back out 6 months later, you haven't had the growth. And in theory, you're only worth 1.5 billion, but then people get the cognitive dissonance of it's a down round and you're screwed, right? If you really...
That's a suicide round.
That's a suicide round. But if you raise 500 million at 2 billion and, even 3 or 4 years later, you go public at 1.5 billion, well, tough shit on the guys who paid 2, but life goes on,